Hello and welcome to the stock specific class here for Thursday, June the 23rd. As always, if you have any questions during the week or any that I don't get to in the live class here, make sure you send those to Jerry@traderspro.com. We talked on Tuesday a little bit about the market being oversold, that we could rally up a little bit. We've done that a little bit. We've alleviated that oversold condition just a little bit. I would have liked to seen it move up a little bit further. Today, though, the price action today is fairly bearish, so it may be that it rolls over. We'll see. I still. I still kind of feel like a bigger sell-off isn't more likely to happen until the end of the quarter, which will be next week. But and it could just be that today's price action it could lead to maybe a down day tomorrow, but it still could be part of the correction. We'll look at the chart here in just a second, but it is in a little bit of a weird spot, and that would cause me to be a little bit cautious with loading up on new trades. I am going to go over some patterns today. At the very least, we'll be able to add some trades to our watch list and kind of keep an eye on some things. But and again, when we get to the market update part, where we're going through the different charts, I'll show you why I think that I'm turning a little bit more bearish today. As we go through that, I'll explain that. So as far as the direction alerts, you can see, again, the bear market indicator is still at the far left side there. But you can see with momentum, we've moved off the far left side of the extreme range. We've moved into the sell range. Now it could, like I said, if we're still kind of correcting here, it could push this a little bit further to the middle there before it's done. But that's at least off that extreme range. Sometimes in strong downtrends, that's all you get is a little bit of a bounce, just barely get off that extreme range, and then it can roll over again. But again, overall, in the overall context, we still are pretty oversold. We look at the buy-sell ratios and things like that. As I mentioned on Tuesday, we have all the indications of a market bottom. We just kind of need that last little bit of a flush out sell-off that everyone seems to be waiting for, and I think I talked a little bit more about that in detail on Tuesday. I won't get into that today, but there's different ways that could kind of play out too that I'm looking at as well. Breadth indicator is still in that extreme range. It is off the far left side of that though, and then sentiment is still pretty high. This is the one that needs to be knocked down. That fear, that panic sell-off. This is kind of that final thing that kind of needs to break that we're looking at. And so as soon as that does, then we'll be ready to start building up our portfolio again. Buy-sell ratios are still pretty wide. They're coming in a little bit here, but you can see they're still pretty wide. The buy-sell ratios for the entire market, still really low. This one's important down here. When we don't really want to start adding big portions to the portfolio until this thing gets above 1. So here's 1 right here. And you can see we're still all the way down here. We're at 0.2. So we would need to see things stabilize a little bit, come up a little bit. And the reason for that is because the process that we use, we're looking for that 98 strength rate going from hold to buy. That process works a lot better when the market breadth is a little bit stronger. And so again, these just are all little signals that you can use. Ways you can use the software to kind of help you in making your decisions. The sentiment indicator is off the lows, off the the extreme, but still pretty oversold. And then, as I talked about on Tuesday, if you look at the indexes here, you can see the buy-sell ratios of the entire indexes are pretty extreme right now. There's a question here, other than buying inverse ETFs, why aren't you shorting stocks? I don't short stocks. I used to when I first started trading. But put options are a much better way to short the market. There's so much less risk. Shorting is not just the opposite of buying. There's a lot of there's a lot of danger in them. There is unlimited risk. You could wipe out your you can't just let a short position go against you forever. If you buy a stock, hold on here. If you buy a stock for let's say $50, that stock could drop all the way down to $2, and your broker won't care. Nobody will care. You'll care because you've lost almost all that money. But you can hold it forever with the belief that someday it may come back and it may get back to break even again. You can hold it for 10 years and nobody's going to care. If you're short the stock at $50 and that stock goes up, that would be going against you. You can't just let it go against you and go to $500. Your broker won't let you do that because you borrowed those shares. He can force the sell of those shares to get his shares back, which means he won't do that until your account is completely used up. All the amount, all the value in your account is all used up, and you're out of money. You can't afford to hold it any longer, and then he could liquidate it, and you're done. You're broke. You're bankrupt there. Okay, so there's risks that aren't there with buying stocks. With put options, I only am on the hook for the amount of the put option. I'm not on the hook for more than that. If that expires, worthless, that's all I lose. So I can control risk a lot better. And then definitely in the portfolio, because I don't short stocks, I'm not going to be, telling anyone else to short them. Can you short in this software? Yeah, you can. But a better way to do it is the software is designed to look for bull markets. It's designed to look for bullish trends, and wherever they are. And so, if you're using the software to short, it's not the best software to short stuff. It's not looking to short stuff. So that's another reason that I wouldn't be using this in the portfolio. And then just using those inverse ETFs to manage risk is a much easier way to do it, quicker way to do it. And we're not going to have these periods where we're going to be doing that very often. Most of the time we're going to be able to find a bullish trend somewhere and just shift our portfolio around to catch it. And then when we do have bear markets, when they come around, I'm showing you right now a way that you could kind of deal with that. So hopefully that answers your question a little bit there. I don't discuss put options because this is not an options class. And again, this software is not designed to be an option software. Okay, it's designed to be a trend following stock portfolio software. I do have an options class that I teach is part of another program. If anyone wants to contact the office and find out more about that, they can. But I don't address options in this class. We just focus on what the software is designed to do, and to maximize that. And this gets back to also a whole other discussion about There are tons of different ways that you can trade. There's so many different ways that you can go about trading. There is no one perfect way to go about it. So, you can be just an options trader and that's all you do. You can be just a investor. You can be a trader. The best thing to do is kind of figure out what you have time for, what you want to learn. Some people, that's why they like the software, is they don't really have the time. They're experts in their field. They're doctors or lawyers, and all they want is to know when the signal is telling them when to buy and when to sell. And they want a simple process. Again, I'm usually assuming that people that are attending these classes, want to dive into a little bit more, learn a little bit more about reading chart patterns and price action and things like that. All right. So let's get into our chart then. Now, you can see here, let me pull it up. You can see the bearish price action today. This is something I always tell you to watch for, look for. If you had a little bit of a rally in the market at all, is you see a situation where you open higher and you're trading lower than where you open, but still higher than where you closed the day before. Again, the indexes are showing an up day. The S&P is up. Well, actually, it might have moved down now. It might have moved into yesterday's move. This is showing that we're down a little bit here, but it's still, the price action is still bearish. The fact that we're trading lower than where we opened higher, we weren't able to maintain that. And context is also important here because we've rallied up a little bit already. And I told you on Tuesday that I was expecting that we'd rally up. What we might see is just more of kind of a choppy type rally. That's a sign of a correction within a downtrend. And these are, again, these subtle clues that you need to learn to pay attention to kind of read, to determine whether the market or the stock is acting like it wants to go up or acting like it wants to go down. In an uptrend, when you're in a strong uptrend, you'll get these bursts of a move up, these impulsive moves up. And then when it pulls back, the pullback, see a lot of times when people are looking at a chart or something, all they're looking at is it up or down for the day? And if it's up, that's good. If it's down, that's bad. We've got to dissect that a little bit more. We got to know, okay, how is it pulling back or how is it rallying? Because in an uptrend, it could pull back and you say, oh, that's bad. It's down today. But if it's pulling back and it's more sluggish as it's dropping, it drops a little bit one day, tries to rally or has a rally day and then drops again back down, but it's not really dropping sharply. That's telling you that the buyers are still there. The buyers are still strong. They're just taking a breather. They're taking a break. And what should happen is once that break is done, it should take off again. Those buyers should get excited and start buying again. And that's what creates that stair step. So on the pullbacks, you want to see, a controlled pullback, a choppy kind of pullback. And that tells you that uptrend is still fine, that uptrend is still strong, and you want to stay long on that stock. The opposite is true in a downtrend. You get a sharp sell-off, and then when it tries to rally, it'll be sluggish. The buyers just aren't there. A lot of the buying is actually short covering, people covering their short position, getting out of their short position. So it's not the real strong buying of believing that it's going to go higher. It's the buying that's saying we don't know how much further it's going to drop, and so we want to alleviate risk a little bit there. And it tends to be more sluggish. And that's what we kind of are seeing here. What we saw the snapback rally right here on Tuesday. And then yesterday we opened lower. So we opened lower and we tried to rally back up. We tried to get higher than yesterday. We couldn't. We closed lower. Today we opened higher, but then we couldn't go any higher than that. We're now trading lower than that. This is sluggish behavior right here. And what that's telling me is that's telling me that when that's over, and that's what we're trying to kind of determine right here and discuss right here, is when can that be over? And like I said, it may go into next week. We should, though, have another move down. This behavior is acting like it still wants to drop. There's no buyers. Nobody wants to buy. Now, there's other areas that we can look at too. We're going to get into in the watch list. I've talked about how we could look at the chip stocks. They tend to be a leading indicator. So if the chip stocks are having a good up day, if we get to those and they're actually up today, then that might be a sign that maybe we are okay, or maybe there is a little bit of strength there. It may be strength is starting to build there. If the chip stocks aren't, if they're weak today, it's telling us what we already know, which is that there are no buyers there. Nobody's excited about jumping in right here, and this is why we're just not going to see that aggressive buying until until we get that panic sell-off. The stock, you'd say, well, the stocks are on sale right now. They pulled back well off their highs. Netflix is way down. Facebook is way down. Apple's even pretty far down. Yeah, but again, what we're trying to read as the professional traders, and what the professional traders are telling us right now is they haven't come down far enough. They're not excited to buy, and they're the ones that move the market. And so this is why you got to be careful. Just looking at something that's down and wanting to buy it just because it's down well off its highs, you can't do that. I'm not saying you can't do it, but the whole purpose of what we're trying to do here is follow the professionals. We're not trying to outsmart the professionals. And so until I see them wanting to really get aggressive and start buying, I don't want to be aggressive and start buying just yet either. And this is confirming that. Now, like I had talked about on Tuesday, I still feel like we ought to get up to this area up here. This is where the previous support resistance is. A support back here. It was a resistance right into here. And again, maybe we'll do that. Maybe today's bearish price action, maybe this is just wave A, and maybe this does lead to a move down tomorrow, and that's just wave B. And then next week we rally into this area right here, get to the end of the month, which is the end of the quarter, and then maybe we roll over and have a bigger move down. The reason why I think this quarter is going to be important is that I think this is going to be the first quarter that we're seeing the slowdown, seeing the potential for that recession. We heard with the Fed meeting before Congress yesterday and today, Chairman Powell talked about the possibility that we could have a recession. I mean, everyone pretty much knows that's going to be the outcome of this. I've talked about this before, that we've never had a tightening cycle like this that's avoided a recession. So to assume that they will is actually the lower probability expectation. But I think that I think this is the quarter where we could start to see that. Maybe I'm wrong. Maybe it goes out another quarter before we see that. But anyway, that's kind of timing-wise. That's kind of what I'm looking at. The bottom line, though, is that this is signaling that we should have at least a downward move. And again, this is assuming it stays this way into the close. We still have an hour and a half before the market closes, but I would assume that we have a down day tomorrow, or this is pointing towards a higher probability of a down day tomorrow. And then after that, it's, does it rally back up into this area here, or is it done? So we are in a little bit of a no man's land right here. You could make the argument this is wave A, wave B, wave C, just a really short wave C. But I just don't see a whole lot right in here. There's this extreme that's very close to that could be considered the support area. But when I'm looking at support resistance, I don't like to focus on exactness. So what I see is a lot more touches in this area right into here. This low of that day is very close to all these days right here that we're right in this area here. You do have this extreme. This is where it gapped down to. It retested it here. It retested it right in here. So you've got this zone right here, and you could say that we've hit the minimum of that zone. But also with corrections, there tends to be a time element of it. You'd like to see a little bit more time in the correction. 2 or 3 days is a pretty quick correction, and pretty quick corrections don't happen very often. So time-wise, I would think that this might have a little bit further to go. You can see, like back in here, this was the initial rally. It started to drop right here, but it wasn't done yet. It took a few more days. This was anywhere from 5 to 10 days or so in that range to kind of complete that correction. We've only basically have 3 days in the correction with the rally on Tuesday there. So these are just things that I'm looking at. Could it just drop from here? Absolutely. I think if it is going to drop from here, though, there's got to be a headline reason for it. There's got to be something that breaks, news that breaks, that's big enough to freak the market out. You could have made the argument that maybe the Chairman Powell testimony could do that, but very, very rarely do you get anything real big out of that. Those things tend to be just a big show for the people in Congress to just talk. If you'll notice, they very rarely even focus on the question. They get their big spiel off, the political rhetoric out of the way, and then very rarely do you ever get anything productive out of those things. That's why I never watch them. It's like, is there a baseball game on? I'm going to watch a baseball game because it just seems like a big waste of time. But rarely do you get a big market move out of that stuff. So I don't anticipate it'll come from there. All right, so and that's pretty much how I feel with the rest of the indexes. Another one to kind of focus on, though, would be both the NASDAQ and the Russell 2000. You'd want to see strong performance out of both those indexes, the small caps and the technology stocks. If the rally is really strong, you should see outperformance by those. And they're not telling us anything different today. At least the NASDAQ 100 isn't. Let's look at the Russell. Yeah, Russell's telling kind of the same thing. Nothing really different there. Now, a couple of areas that we do want to start paying attention to. The bond market's had a pretty sharp rally the last couple of days. Now, you could still make the argument that this is just a correction. You had this move up, and then it went lower, open lower down here. So this is kind of choppy. This could still be looking corrective for another move down. The previous lower high was right through here. And obviously we've gone to a lower low. So you probably need to see a move above here to start to talk about a potential trend reversal. And it would depend on how it looks getting up into there. If we're chopping back and forth anymore, that would be corrective looking. I would expect that it's going to continue to trend down. If it continues to move sharply upward, then that could look, if it's looking more impulsive, that could look like a potential trend reversal. So if it's looking impulsive going to a higher high, then that would lead me to believe that that there's a stronger probability that we're in a trend reversal in bonds. Now, what is a little bit interesting is typically, we've seen this relation. We haven't seen this relationship for a while with the way the bond market's been moving, but very often you'll see an inverse relationship with bonds in the market, and that comes into play a lot of times when when the bond yields are a lot lower, um, fund managers will, when they're getting out of the market, when they're selling out of the market, they'll go into bonds to get some return. It's not a big return, but they'll get something. And so the bond market will go up when the market's going down. We've seen, though, with the bond yields going higher that and continuing to go higher, that we've seen bond market going down and the market going down, kind of moving that same direction. So, that's something I'm going to be looking for too, is a signal that maybe there could be a little bit more of a near a bottom, or we're at a bottom or near a bottom, as we start to see that relationship again. We start to see those bond yields start to come back down, the bond market start to rally, and we get a little bit back to a little bit more of that inverse relationship. But more importantly is well, let's skip over gold right here. Gold is still in the sideways range. On Tuesday, I talked about just drawing a trend line above here. If it breaks above here, that'd be bullish. If it breaks down below here, that's bearish. And again, we're still stuck right in the middle there. But oil, I think, is significant. It looked like we were getting a little bit of a bullish reversal. Actually, it looked like we were getting a little bit of a potential bullish reversal right here. I jumped back into USO, looking at this as being support. We had this big down day on Friday, and then Monday we had kind of an inside day. It looked like a little bit of selling exhaustion there. So I went ahead and got back into USO. It's the only one I'm holding in the portfolio right now. And the reason for it is because oil has really been the only thing that's been working. And, we've talked about some of the sectors that have been going up with the market going down. Oil, we talked about defensive stocks, and we talked about some of the agricultural stocks, and we all can see that supply and demand dynamic playing out. But the agricultural stocks have been hit today. Oil's been hit today. A lot of the oil stocks are down big again. And that's concerning, because when you get a big market flush, a big market sell-off, the panic sell-off, everything goes down. You can't find anything going up. And that's where the panic kicks in, because people are looking about where to go, where to buy, where can I go? And lately, they although we've had some of these decent sized sell-offs, people have been able to look at oil. They've gone right back into oil. You've seen oil start rallying after these sell-offs, and these agricultural stocks start rallying after these sell-offs, because they still have a place to go. They can still, there's still a place a bullish trend that they can get into. Now that we're seeing these break down, this is really where a lot of the money is right now. There's a lot of people, a lot of professionals at least, in these stocks. If they're jumping out of them right now, then you have to ask, well, why? Why are especially with the demand? You can see the demand for it. You can see the demand for oil. You can see the demand for agriculture with the Russia-Ukraine situation going on. Then that's concerning, because that could be a little bit of a precursor to a bigger drop. Now, again, I just got done analyzing the chart. I don't know if where the chart is right now, it's ready yet for that drop, maybe into next week. I talked about the end of the quarter. But this is something to pay attention to, that these oil stocks are really starting to drop, and this is really looking impulsive now. It's looking like a little bit of an impulsive move down. Okay, and we're already oversold yesterday. I thought for sure, one thing you look for on a drop for a potential bottom is a bullish reversal candle. That was a pretty good bullish reversal candle yesterday. And we reversed it today, and we reversed it pretty dramatically, especially on some of the individual oil stocks. You look at Devon, for instance. So we get this bullish reversal candle in an already oversold condition. You almost always get a bounce off of that, and it just obliterated, went even lower right there. So this is definitely impulsive down. And now, and so one thing to keep an eye on too is when it starts to rally, how does it look when it rallies? Is it starting to rally back up, but it's more choppy? That would tell me that hey, there's no buyers there. This is actually rolling over. This could be in for a bigger drop. So this is something to start to pay attention to. And again, there's been a reason why we've only focused on these particular sectors for the last couple of months. It's because that's what's working, and now it's getting to a point where I don't want to know if I want to be in anything right now. So I am going to go over some individual stocks today, but to put into the watch list. But again, I wouldn't really want to be jumping into too much right here. Okay, that does concern me. That, well, if you look back here on Devon, you had a bullish inside day. So you had this big drop right here. This is a bullish inside day. Usually you'll get a little bit of a rally off of that. It didn't. It opened lower, and it opened lower and closed higher than where it opened, but still lower than the day before. That's a bullish reversal candle right there. And then, like I said, it just dropped below that. Now this is getting extremely oversold. You're probably going to get a bounce out of this soon. But again, that bounce, and maybe this is what we get a bounce over a few days going into next week, and then everything rolls over and drops at the end of the quarter. I don't know. We'll be looking at this next week, next Tuesday, as we get closer to the end of the month, and how things look next Tuesday. But these are some things I'm going to be keeping an eye on, and that do concern me a little bit. The dollar, again, we talked about this on Tuesday, that it might be just kind of moving back and forth in the sideways range. You got a little bit of a potential cup with handle formation developing here. Now, if it suddenly sells off, we did get this little sharp sell-off right here, and then it's been kind of sluggish right through here. If it starts getting down closer to this low, it's not a cup with handle formation. It's got to kind of hold this area right through here. It really can't drop below this low. That's not really much of a handle. If it drops below that low, you're looking at a different pattern there. But the fact that we barely broke out and we've started to kind of move a little bit sideways would indicate that's forming a little bit more of that cup with handle. That's what we'll continue to watch that and see how that develops there. VIX showing a little bit of a bullish reversal candle today, which should, again, it's not that in and of itself isn't really telling us anything we don't already know. We're getting a bearish reversal candle in the S&P and a bullish reversal candle in the VIX. But if you look at the behavior of the VIX over the last week or so, you can see you had this impulsive move up, and it's been pulling back in a kind of a choppy, possible bullish ABC pattern type movement here. Now it could still drop a little bit lower, but again, we're getting close to an area here where it could start to spike again, and that's something we'll kind of pay attention to. We already looked at the charts. The charts are telling us that it's possible we could drop right here out of this, but from a time reason and that support resistance reason, would probably have a little bit further to bounce around before dropping. And again, we could just see back and forth on the VIX during that period of time, where it just kind of keeps kind of chopping like that. Chip stocks, I said, well, if chip stocks were outperforming today, maybe that could be a signal that we could maybe turn a little bit more bullish. But it's down. Chips are down today. And again, it could just be this is wave A, wave B, and then we get wave C. I would have liked to see the chip stocks get up into this area right here. Not quite there. Didn't quite get there. But definitely this is looking corrective right through here, sluggish. Nobody's Nobody's running in and buying chip stocks, aggressively at least. And so it makes me wonder if they're not done dropping yet. Transports, same thing. Just kind of moving sideways right here. That was an impulsive move down. Now here it moved a little bit sideways and then managed to rally up, and then this was a sideways move after that rally up. This is what threw us with the way the market behaved last or a couple weeks ago. Looked like it was poised to move up a little bit higher in that context, but it didn't. There again, that could be another really strong bearish signal too. That you got a bullish type of price behavior, impulsive up, corrective. You should have gotten at least another move up. You couldn't even get that. You couldn't even get a small breakout move. I know we're looking at the transport stocks, but this pattern was very similar to what we saw in the indexes. Couldn't even get that before dropping pretty sharply. Just no buyers right now. And so if you're going out there starting to buy just because you want to buy something and all these things are down so much that you're just going to buy them here. The professionals aren't buying them. So you gotta wonder if you should be buying them. And yes, things can drop a lot further than this, where we're at right now. They can go a lot further. They can drop even more dramatically lower. And again, that is exactly what creates that holy crap moment, right? I was about to say the other word, but that holy crap moment where it's like, I just can't believe Microsoft is down this far. I can't believe Apple is down this far. This is crazy. This day is crazy. You get those big sell-off days and you're like, this is insane. I didn't think it could go any lower. That's what we got to kind of feel when we know we're really close to that bottom. That's the type of feeling you're gonna experience, and when we know we're close. Bitcoin's almost there. It's like, man, you're seeing these cryptocurrencies going out of business, and it's like you have this drop right here, and then there's no buyers. Nobody's buying it. I didn't think it'd go any lower, and next thing you know, you have another leg lower. Now, I do think that Bitcoin, and I don't, again, take this for what it's worth. I have no expertise in Bitcoin. I barely know how Bitcoin works. My brother's big into Bitcoin trading, and he asked me one day, he's like, are you how come you're not trading Bitcoin? He's like, I don't understand it. It's like, and I understand, I understand stocks very well, and so why, at my age, it's like, why do I really want to go jump into something that I don't understand? But Bitcoin is, it's the poster child of crypto, right? You ask anyone to name a cryptocurrency, and everyone would likely start with Bitcoin. Now, you can usually tell when someone really is educated in Bitcoin, because they could probably name about 4 or 5 other ones. But this is probably the Amazon.com. Back in, we talked about some of these cryptocurrencies going under, like the .com bubble in 2000. Well, everyone knew that Amazon was going to survive the .com bubble. As much as it came down with a lot of the other stocks, it was the poster child of the .com area, and it was going to survive. And I would imagine that Bitcoin is going to be one of them that survives. But yeah, it's, you look at Bitcoin and you're like, I can't believe it's down this far. That's getting pretty crazy. This, and it may bottom before the market does. It may get to a point where it's done dropping and it starts rallying actually before the market starts selling off. All right. Although, again, we're set. You can see right here we're getting to a perfect storm where cryptocurrencies are dropping. Now the oil stocks are dropping. The commodity stocks are dropping. Bonds are still in the downtrend. They're still dropping. Where do you go? Where, you can start to see where we're building towards this potential panic that everything's going down. And that's what's got me concerned, because, again, we haven't had that. We see the oil markets down the last week. Last week we talked about how, but we were looking at it as a pullback within the trend. And now we're looking at it as possibly a trend reversal. All right, so let's take a look at, I don't want this class to be completely depressing. Let's take a look at some stocks. Now, what I'm doing here is obviously there's a reason why we go through this format. We want to understand the market condition we're in first before we start to decide whether we want to get into trades. And for the last several weeks, it's been that we don't want to get into anything new or a ton of anything new. And like I said, I know it's caused some of these updates to be a little bit boring or repetitive. But that'll change when we do get into a bottom and start moving up. We're going to have a lot of stocks to talk about, new stocks to talk about, new stocks to add to the watch list, things to get excited about. But when I get done with analysis like that, my first inclination is take the rest of the afternoon off. I don't want to buy anything. I don't want to be tempted to buy anything. If I keep looking, I can find something that I can talk myself into buying. Why not just take the afternoon off, The problem is, though, is that we know we're near a bottom. Like I said, everything's pointing to a bottom. All we need is that panic. And when that bottom happens, I don't want at that point to be saying, oh, now I want to get into stuff. What do I get into? So keep that in mind, that I'm trying to keep our watch list built up. And you've seen us put stocks in the watch list and then dump them a little while later when they were no longer acting like an uptrend or acting like a strong stock. That's okay. It's okay to add it and then dump it if we have to. But what we want to do is at least be prepared to where if the market turns or when it bottoms and when it turns, we want to be able to have something there that we can look at to start to get into. Now, we don't have to have a lot, because we're not going to just go all in once we think we're at the bottom. We're going to, we want to make sure it's proving to us that it's at a bottom, starts trending up, and you'll start to see stocks rise to those higher strength ranks and develop those stronger uptrends, have those stronger chart patterns. But we just want to be prepared when that happens. So as I'm going through this today, the reason why I'm prefacing this before I get into it is I don't want you just jumping out and buying these just because we're going over them in class. All of these would require a little bit of confirmation. And I just got done talking about a market condition that wasn't ideal. And so these are just stocks we're going to be adding to the watch list to keep an eye on. Okay. Now one thing, obviously we've got oil at the top. We looked at a lot of oil stocks, but I just showed you how that chart's looking like it's getting broken a little bit. Even though this is still at the upper part of the range right here, I'm going to move down the range. And if the market bottoms and starts rallying, one of the areas that should rally with it is computer and technology. So we're going to pull a few stocks from there, business services. So I'm going to focus on these two, and I get it, they're down the list a little bit, but that's why we're not getting into it right now. We're again building a watch list. These should participate in a market rally when it finally rallies. So let's see if there's any interesting charts there, any leadership stocks in there that we can be ready for. So if we go into business services, I'm going to go into the hold range right here. And right at the top of the list, this RCMT has a 100 strength rank. Let's take a look at that chart. Let's switch this over to signals here. Question, why couldn't we buy some good stocks now near a bottom and hold them for 6 months? Yeah, you could. You could start to, if you're an investor and you don't care about waiting for a market bottom, and you want to just, you believe that Facebook is going to be fine and it's down so much, and why not just get into some of it right here? Absolutely, you could do that. But I'm not going to, because I know what I'm looking for that bottom. I've been through this a number of times. I know when you get those flush out moves, do you realize that let me kind of illustrate this so we can kind of just understand, you can understand at least where I'm coming from. You have this big long move up, you get a drop, you get a attempted rally right here, you start to move lower, and you've already come down quite a bit off the highs. And you say, okay, that's down a ton. We're probably getting near. We're seeing all these bottoming signals. We're probably near a bottom. Why not just get in right here? We're already down. Even if it drops down further, it's going to come back up again. Well, the flush sell-off move could come all the way down into here. It could go down as much as it's already dropped, and it could do so in about 3 or 4 days. And so, and again, if you don't care about that, because it'll eventually come back up, you're going to be taking this big hit right here. Now, again, this is my personal philosophy, because the other argument would be, okay, well, Jerry, what if you never get that big sell-off move then? And what if it starts to move back up? Then you don't have anything in right now. You're not participating at all in that rally. Okay, that's true. Okay, but so in other words, I would be risking this amount right here by not getting in. But the way I would look at it then is, okay, now we're acting like an uptrend again. Now I can start adding. If that is the bottom now and we didn't get that flush out move, then we're starting a new uptrend right now, and I'm going to make plenty of money during that new uptrend. I'm going to be okay with missing the first part of the rally. Now, another argument there too is usually the first move of the rally is very sharp, but then it'll be a little bit more steady as it continues to climb. So I'll be able to get in there. I'll be able to see it's now acting like an uptrend and things are turning and all that kind of stuff. And it's not going to move all the way up here in 3 days. And I've missed a huge chunk of the rally. I'm never going to get that back. And then I go back to the argument of, how many times have I experienced a market bottom that hasn't had that flush sell-off? And my answer is, at least the major corrections, the answer is never. So do I want to jump in assuming that we bottomed in a way that we've never bottomed before? Well, at least in my experience. I'm not saying it's never happened that, because I'm sure it has, but just in my trading experience. And I'm looking at this as a much bigger type situation, not just that, there have been some minor bottoms that have taken place that where you didn't get panic selling. But this is a bigger context here where I believe you're going to have it. So there's kind of my argument there. Like I said, the thing about trading, it's like coaching a basketball team or something. you do something as a coach, and if it works, you're a genius. If it doesn't, you're an idiot. And everyone has their opinion. I go to baseball games, and I want to tell the manager what to do because I think I'm smarter than him. And that's all he's done for the last 20 years, and I'm trying to act like I'm smarter than him. That's human nature. There are different ways to go about it, and that's why I'm saying if you don't care about capturing the bottom, if you don't care about trying to recognize a panic sell-off, what is a panic sell-off, what isn't, go ahead and start adding right here. I said that's all that's missing. Everything else is right there pointing to a bottom. The only argument I would make is just don't go all in. Don't get all use up all your funds right here and go all in with it. I'm going to wait because when you get that first panic sell-off, it can last a little bit longer than that. So I want to at least get that to say it's acting like a bottom. Let me draw this out. So I want to get that last panic sell-off right here, and then maybe it tries to bounce and has another one. That's what I would want to start adding, and then maybe it could go a little bit lower, but we got to be very close to a bottom in that range. That's where I feel a little bit more comfortable about starting to add at that point and starting to build that portfolio at that point. Hopefully that makes sense. But again, that's my opinion. I'm not saying it's right. You could disagree with it. But that's why I was just trying to answer your question from the way I'm viewing it from my standpoint. All right, so RCMT, again, it throughout the downtrend of the market, this has been trending up. Has a pullback right into here. What I'm hoping for is that it goes back to a buy signal. That would be my confirmation, or even goes back up and breaks out to a new high. I'm going to go ahead and put this in here just because this is looking like a pullback within the uptrend. It has a nice uptrend. It's been going counter to the trend of the market. So we're going to click on this green little plus sign up here. We're going to add it to the stock specific class watch list. And then another one under business services is the EXLS. And again, you had this run up right here, this pullback right here, and this is just real subtle. This looks corrective. We're sideways right in here, but recently it did put in a higher low right there. And this is one that if it can kind of break out above the sideways range, if it can break out above the sideways range, the rule of thumb is that it will tend to go up about the same distance as the top of that range to the bottom of the range. So you could take that range distance right there and project that upward. It doesn't always do that. And, you see me illustrate this a few times. A lot of times when I'm illustrating it, though, we don't get the breakout move. It doesn't break out or hasn't broken out yet. Hold on just a second. Hold on. All right, so we'll add this one in. And again, normally we just be waiting for this to go back to a buy signal. This is one that I think that the market, were to pull back a little bit further, it could drop it below that low, but it's still, you could even look at this range. You could have a market sell off from here that could just come back down to this lower part of the range right here. Like I said, we could be kicking these out later on and looking for new ones at that point, but we're going to go ahead and just put this in the watch list for now. And then under computer technology, there's a few that I want to add. This AZPN, Aspen Technology, 97 strength rank. And again, you can see the stair step pattern here. And it could be that this is just wave A, wave B, and you get wave C, and then it takes off again. But again, that's why we're just putting it in the watch list. But that one's been trending pretty nice. And then SWIR, right in through here, 97 strength rank. The same thing here. You had it's a breakout move higher right here. It's like a little bit of an ABC pullback right here. Came back to the breakout area. Add that one in. And then one more. This PSTG, Pure Storage, 96 strength rank. Now again, this one's come down quite a bit, but it's showing a little bit of a potential trend reversal pattern here. You can see the stair step down. So that stair step is lower highs, lower lows. And then you have this sharp move up right here. So this is an impulsive move up. And in that impulsive move up, you went to a higher high. So you broke that higher high. Then immediately it pulls back right here. And, you know, it's just started to kind of barely rally right here. But it has put in a higher low. We got to see if that holds. But like I said, it's putting in a very subtle, it's acting like it could be shifting from a downtrend into an uptrend. And that's why I'm going to put it in the watch list. What you'd look for is a continuation of that. You've got your higher low, or at least looks like higher low right now. Does it move back up and go to a higher high? If it comes back down and goes below that low, we're still okay because you're still above this low. But again, you'd want to make sure it holds this low right here. If it starts dropping below that, we'd boot it out of the watch list. But again, this is what we're going to be looking for a lot when the market does bottom, is do we see those real subtle characteristics of a trend reversal. Now again, there at some point you got to say, okay, how much confirmation am I looking for? Now, if I was in, just to give you an example here, if I was in a situation where the market had that panic sell-off, and I see this behavior where you get a impulsive up, you go to a higher low or higher high, pulls back, you have a higher low, I'd be all over this right now, pretty much. Maybe wait for it to go to a buy signal, but I'd be all over that because the market conditions were telling me, hey, we're near a bottom. Here's a stock that's acting like it's turning the corner. Okay. And there's going to be a ton of these. Now, then this also gets to a point, though, where maybe you're scared. You know, you've never experienced a market sell-off before. It's not going to feel like you're going to want to buy. Well, then you can manage it a little bit differently. You could say, okay, I want a little bit more confirmation. I'm going to get in this thing when it can at least go to another higher high right here. You know, then you get into an argument of how much confirmation do you need or want to look for. And again, that for me, that depends on the market conditions. If the market conditions are strong and the trend is strong, I don't need very much confirmation at all to get me into a trade. In fact, usually I want the least amount of confirmation. I want some, but I want very little because I don't want to miss the move or miss a good chunk of the move. for now, I'm going to go ahead and just put this in the watch list because, again, the market conditions, I don't want to take that chance just yet, especially, too, that this is not really coming out of this higher low very strongly. This is a little bit sluggish right here. This is acting a little bit choppy, which means it could have maybe it isn't done moving down. Maybe it does go to a lower low. So I'm just going to go ahead and put this in the watch list for now. Now, going back to the S&P chart here real quick. And we are coming off the lows a little bit right here. Maybe we do end up closing higher. And again, if we close higher, what that means is that it's not a bearish reversal candle, but the price behavior today would still be sluggish. I'd still say it's having trouble rallying. That they're not, the buyers aren't acting real strong just yet. But it would also confirm that we probably are going to move up a little bit higher here, get up a little bit higher in this range. Now, remember, all I've got right now is in the portfolio is oil, and I may be considering getting out of that. I'm not down by very much right now, so I'm going to kind of watch it. So if you're wondering, well, why aren't you jumping into SOXS or SARK? I don't need to hedge anything. So, but you could say, well, you can make some money on that going down. And that's a good point. And if we do hold a bearish reversal candle into the close, maybe I do get into SOXS or at least get into one of the two in case we do drop immediately. This is the semiconductor one, SOXS. It's up a little bit today, but not a ton. The market's, the chip stocks are down a little bit, so it's going to have that inverse relationship there. See, what I'm looking at here, though, is it looks like this could be just wave A, wave B, and I'm kind of waiting for this move down into here, which would be that rally into that resistance area on those index charts. So I don't think I'm going to add any of these in just yet. SARK is down a little bit further here. Maybe that's when I add that, just in case we drop. This should go up. This is down a lot more right here. And there's a support resistance area right in here. We'll see. I'll see how it looks. If we manage to close higher though than the open, I don't really see a reason to do anything. Just because I don't need to hedge anything right now. I don't need to do anything. I may just kind of wait and see what happens next week, but haven't decided what I want to do with those yet. But that would be a reason if you're wondering why I'm not in those right now. I was using them mostly to hedge all those other positions I was in. And I talked about this last week. I'll say it again here. Right now, it's kind of boring. We're not doing a lot. But this is part of the learning process, is recognizing when not to do something. Because a big part of trading, a big part of your success is recognizing when not to do anything. Everybody that I've ever taught that has a portfolio, as long as they've got money in that portfolio, they want to buy something. They want to put it to work. But really, when it comes down to it, you only want to put it to work because you want it to work, right? You want it to be successful. If I were to tell you, if you're going to go buy in all this stuff, you're going to lose money and you're going to have half the value in your portfolio, you're not going to want to do that, right? At that point, you don't want your portfolio working because it won't be working. Okay. So remember, there's a natural bias. Human nature is to believe that well, put it this way. This is something, and this is a really, I'll finish up with this because this is such a critical part of trading psychology you have to understand. Every trade that you get into, you believe is going to work out, or you will never put money into that trade. Every single trade I have ever made in my life, I believed was going to work out, or I would never have put that money into that trade. Now, the reasons for believing it's going to work out can vary. It could be very sound. These are the fundamentals. These are great fundamentals. Here's an uptrend of the stock. The stock should continue to move up. Or it could be as ridiculous as listening to some moron on a train talking about how his barber said that XYZ stock was gonna take off, and you believe him. Every trade you get into, you believe is going to work out. But what's the reality? Not every trade is going to work out, right? And not every decision for a trade is going to be sound. So hopefully what you're learning in this whole process is, how do I make my trade decision as sound as possible so that I can save myself from myself simply because I want to put my money to work. I want to have something to get into to make me money. Because there are going to be conditions, and we're in them right now, that are screaming the best place to be is on the sideline. Just wait. I'm telling you, wait. We're going to be fine. We're going to make money. We're going to have that portfolio increase. We're going to have a nice bull market again at some point in time. But let's wait until it's acting that way. And more importantly, we're trying to follow the professional traders. Let's wait until they decide that it's time to jump in and get aggressive and buy as much of everything they can find right now. Because they're the ones that are going to move the market anyway. All right, let me just finish up with a couple of questions here. Yeah, you could add volume to the charts. I don't keep the volume bar on because it can bleed into the chart. So here's the volume bars. And yes, volume is something we would consider when we're getting serious about something. We could look at the volume and all that. But I don't usually keep it on the chart for this reason. Especially when I have the gray and red, it just all bleeds in. So usually when I'm analyzing charts, I'm taking that off. But yeah, this is where you would add it on or take it off, is right here. Last question, how far back do you go for support resistance? Well, what's most important is what's happening right now. Like if we go back to PSTG, I usually like to look at where, well, actually, let's go. Well, we can start right here. I like to look at the 6 months is usually what I like to see, is what's been going on in the last 6 months. If I need to go back further than that, and I will, I'll go back and look at a bigger context to see if I'm missing anything. I think that's a good thing to do when you're getting real serious about a chart. Check the longer term context. And then I'm looking at as far back as I need to go to see, well, when did this downtrend start right here? Well, it started right up here. I'm looking at it possibly ending right here. Here's that lower highs, lower lows. There's a stair step behavior right through here. Here's a little bit of a support area where it bounced off of a lower low. Here's where it bounced, looking like it's bouncing right here. That could be an inverse head and shoulders pattern that's developing right there. That went to a higher high. Now, this could be significant back in here as it relates to horizontal support or resistance. is there a reason why it's stopping right in through here? Well, yeah, it found a little bit of a support area right there. It bounced off of that, bounced off of that. So really, I go back as far as I feel like I need to. You could go back maybe more than you need to sometimes, and sometimes that's okay. But I look back as far as I need to read what's going on. And a lot of the stuff too that I'm talking about, there's trainings on these too. If you go to Traders Pro, if you type in Traders Pro on YouTube, go to YouTube, type in Traders Pro, join the what do you call it, the follow it or what have you, and you'll get access to all these training videos that I've done over the years. And you can, if you want to learn more about stair steps, you want to learn about Fibonacci retracements or chart patterns, what is a head and shoulders pattern and inverse head and shoulders pattern. You can put as much work into it as you want going through those videos. A volume column to these lists. I don't know if I understand. If you want to email me that and maybe tell me a little bit more specifically what you mean. I don't design the software, so that might be something I'd have to pass to somebody else. But yeah, if you want to email me a detailed thing that you're looking for, a request, I can definitely submit that. I don't know if they'll do it, but we're always looking for ideas that people have that could make the software better. So if there's something that you're looking for there, I just don't understand what you're asking there. So just email me on that. Don't do it here because I'm about to wrap up class, but yeah, you can just email me that. And I can take a look at it. All right, thanks everyone. Have a great week. We'll see you Tuesday for the next market update. Bye now.